You're with us here on a new edition of Midcap Radar. The market is up 43 points, 11,915. It's been a little iffy from the word go. So it's not clear one-way traction or direction. It's a bit hazy out there in terms of the very near-term outlook. You could say we're up for the third day in a row, and that is true, absolutely true. But just look at, the immense amount of rotation which is happening. Stocks a little all over the place, especially in today's session. I think the close will be important today after what happened overnight. I mean, remember, US markets from being up almost 2% intraday ended deep in the red. So, I mean, the backdrop to begin with was not all that great. So far, so good. Let's see how the last 2 hours pan out. With me, my colleague Sonal Bhutra. Hi, Sonal.
Hi, Prashant. Good afternoon. You rightly pointed out the last 1 hour is something that we'll be watching out for. But today's very stock specific, so to say. A lot of these companies have reported numbers and stocks are reacting to those. So it's up around 40 points in the Nifty. And if we look at the contribution chart, it's HDFC Bank that's actually contributing maximum gains around 20 odd points. And it's Reliance that's capping gains for the Nifty right now. It's around down in trade right now, and TCS, HCL Tech, Infosys. So IT Pack has bounced back and contributing to Nifty gains today. Let's see how it pans out in the last 1 hour of trade. We'll discuss all that, individual stocks and a lot of earnings. But first up, the top headlines. Sensex and Nifty up over 0.5% with support from many sectors. Tech stocks gain the most, but realty, consumption and finance also do well.
ACC hits a 52-week high after the company delivers an earnings beat on improved margins. The HDFC Life management speaks to cnbc TV 18. The stock gains after an inline quarter. The management indicates optimism around growth, while Britannia slips after volume growth lagged expectations.
Infrastructure major Larsen & Toubro surges after the company emerges the lowest bidder for building the largest section of the Mumbai-Ahmedabad bullet train rail route with a bid of around 25,000 crore rupees.
The finance minister emphasizes that further stimulus is clearly not off the table at a book launch event. Speaking at the same event, Mukesh Ambani said India needs to rethink and reinvent its manufacturing sector. Okay, I think, so those are the headlines, and we will talk about some of them in greater detail in a bit from now. But we have the management of Granules India now joining us to take some questions. Granules reported numbers, and let me just quickly run through what the numbers actually look like. So we've got revenues which are up 23% at about 858 crores. These are year-on-year numbers. And consolidated net profit is up 71% at 164 crores. So these are numbers coming in for the quarter. Mr. Krishna Prasad Chigurpati is Chairman and Managing Director at Granules India, and he's joining us right now to take some questions. Mr. Prasad, thanks for joining us. Good to have you here. Could you just run us through what, it's been an extremely strong performance, even against a sort of brokerage expectations, and we have the Motilal Oswal analyst expectations. These numbers are a beat. Could you tell us what led to this strong growth in the second quarter?
It's basically nothing to do with the second quarter. This is the growth story which started a few quarters ago, especially the entire last year. We did invest tons of money, about 1,400 crores in the last 2 or 3 years, and put in a lot of capex, and we had filed a lot of ANDAs. And all the investments that we made have started paying off. So if you see the last 4 or 5 quarters, there's been a steady increase quarter on quarter on all parameters. Absolute profit, ROCE, net EBITDA ratio, everything has been increasing. And this is a continuing thing that's happening. And as far as I'm concerned, it's nothing abnormal. It's everything as per our growth planned trajectory. The only thing is it's been a little bit of acceleration compared to even what we thought. So this year, as it is, we will be doing double the growth what we anticipated. And that's because we got a lot of ANDAs approved earlier than what we thought we would get them at. And also we started getting bigger market shares as there have been some disruptions in the US markets and other markets too. So this is what has led to accelerated growth, but otherwise, this is exactly as per our planned trajectory.
Right. Mr. Prasad, so you said double the growth what you were expecting. So what does that mean in terms of top line margins? I think you had guided for about 23% this year. You're almost at about 30% in the second quarter. What does that mean for profit growth for the full year?
For profit growth for the full year, yes, like I said, I said 25 to 30%, but we see 75 to 80% this year. And again, going back further in future, we still would stick to numbers of saying 30% with FY21 as a base. FY21 will be double the number of FY20, but 22 onward is going to be 30% again.
Okay, so Mr. Prasad, you're actually planning to exceed the guidance that you had given in Q1. So, good set of numbers coming in there. But can you tell us whether you expect these levels to sustain? Because there had been reports suggesting that the API industry in China is booming again. So, do you see any risk from the demand that comes back to China? Or you expect the domestic API industry to continue to do well?
I'm 100% sure these numbers are sustainable, and actually our growth has been led mostly by finished dosages, not just APIs. And one of the APIs we sell in a little huge quantity has been paracetamol, which is slightly COVID related. But the gross margins we make from paracetamol out of our overall gross margin is hardly 15 to 18%. So whatever increases we have in paracetamol really is not going to actually make a big difference in the overall margin increase. It's basically new approvals and finally extra market share, that is our wallet shares with existing customers and new customers that has been giving us the added advantage today.
Okay, so let's talk about your balance sheet then. You have been able to reduce debt by 26% on a YOY basis. What is the debt currently in the books? And by end of this year, what kind of debt reduction plans do you have?
Net debt today, we have about 200 crores cash. So net debt is around 600 crores. And we do not expect to decrease it too much because we have been having, as growth is happening, our working capital requirements are increasing drastically. And also we are investing in a lot of CapEx. This year and next year, we have plans to invest about 400 crores in APIs and finished dosages. And this is already underway. A lot of money has already been sunk in. So we are going to fund all these things only with internal accruals, which is a tall order, and we are very confident we can do that. We have done it so far. So debt decrease, except for the normal decrease that would happen out of scheduled payments, we deliberately would not like to reduce debt at least this year. But no external funding, no equity or debt raising to fund our major expansions that are going forward. We would be needing not only 400 crores for our capex, but another 500 crores or so, 400 to 500 crores to meet our working capital requirements.
We let you go. The performance has been really good. The street is very optimistic. But can you tell us, because there were reports suggesting that the promoters are looking to exit the company by selling partial or complete stake. Are those reports true? And if that is happening, what is the kind of valuation that you're looking at?
I think I've commented on this before. We don't want to comment on this. We don't want to deny this or accept this. But however, one thing what we can always say is we will definitely do what is required by the stock exchange and SEBI rules, and the interest of all shareholders are of the utmost importance to us. Nothing will be done which will go against the interest of the shareholders, and I would not like to comment further on this.
Okay, all right, Mr. Prasad. Thanks a lot for joining us and giving us all those details. So quite an optimistic commentary coming in from Granules. They're expecting to double in terms of revenues versus the FY20 levels. And from there on, they expect a 25% to 30% growth in their profitability. But with that, it's time to slip into a short break. But before we do that, here's something that you, our viewers, must take note of. cnbc TV 18 and National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decisions with your money. As you're aware that if we don't pay the electricity bill on time, we might face disconnection. Similarly, it is necessary for an investor to honor financial commitments on time, else it will lead to hefty penalties.